Live from the Real Asset Queen studios in Kalispell, Montana, this is the Real Asset Queen Live, the one and only show about connecting people, process, and money. Each week, you'll hear mind-blowing interviews from top industry thought leaders, as well as actionable tips and strategies that you can implement in your finances, business, or investing life. Please welcome your host, a former healthcare executive turned entrepreneur, investor, and efficiency expert, Michelle Kimbrough.
Hey everyone, welcome to the Real Asset Queen. We are on episode 24 and we have Michael Wagman with us tonight. And we're going to be talking about investing secrets of a real estate entrepreneur. So some disclaimers, we are not financial advisors, CPAs, tax attorneys, or any of the above. So anything that you hear on our show, please take back to the respectable party and make sure that it fits your unique situation. At the end, I will host a live Q&A. So any of those real estate questions that are keeping you up at the middle of the night, like some of the ones that I had last night, please put them in the chat box and Michael and I will be sure to address them. So it is my pleasure to introduce Michael Wagman. So he is the managing partner and co-founder of Nimble Capital Group. He likes to help others build legacy wealth through multifamily real estate investing. And he's also a guitarist and a music producer. And if you look closely at his background, he's got quite the collection of guitars back there. And we had a lovely chat about that before we jumped on. So Michael, why don't you go ahead and fill in and tell us a little bit more about you and your journey, how you got started in investing and where you are today. And I always like to ask my guests a fun fact that maybe people don't know about you.
All right. Well, first of all, thanks for having me. It's wonderful to be here. I guess the fun fact can be kind of leading how I got into real estate in the first place is I actually lived abroad in Tel Aviv, Israel for 3 years. I was working in the high-tech scene over there in a sales capacity. And what people kind of do over there is you can kind of jump from role to role. There's so many startups. Eventually, you just kind of incrementally increase your pay every year. And I had a decision of, do I want to do that again? Or do I want to move back to the US and take something with the money I've made and invest in real estate? And I chose to move back and start to do that. So, yeah.
That is really interesting. I've never been to Israel, so that must have been quite the experience to be living there.
It was wonderful. I mean, Mediterranean beach paradise, age 22 to 25. I couldn't have asked for any more. It was pretty great.
That's awesome. So is that your fun fact, or do you have another one?
That is my fun fact.
Okay.
I mean, I can tell the audience that I play guitar, but
it's kind of obvious, right?
Yeah.
So tell us about how, when you came back from Tel Aviv and you decided to get started in real estate investing, how did you start and how did you end up to where you are today? Because you, at a very young age, conquered a very big portfolio. And I think your story is pretty amazing how you got there. So do you mind sharing that with us?
Yeah, absolutely. So when I moved back to the US age 25, and at the time I had been watching too much HGTV and I thought I could flip a house better than any of those guys. It was kind of just sheer stubbornness. I didn't know the first thing about real estate. All I knew was that I really wanted to flip a house. And so I ended up moving to Florida because in Florida houses are very cheap. And I bought my first house for $66,000 cash. And I put about $20K into the renovation and I did all the work myself with me and one handyman, no GCs, nothing like that. It took about 6 months start to finish and I made 13 grand profit. So,
wow.
Exactly. 6 months worth of work for 13 grand. And I was using all of my own money too. I had never heard of other people's money or, how basically real estate investing is done at scale. I just sort of jumped in blind and, thankfully, I didn't lose any money on the first one. I didn't lose my shirt, and I was stubborn enough to try and do it again. And basically after that, I spent the following 3 years all across Central Florida, flipping houses, and eventually I tried house hacking. So I bought a 4-unit building. I lived in one of those units and rented out the other 3. Thought, this is amazing. I'm living for free. Bought 2 more duplexes, rented those out long term. Moved out of the unit in the 4-unit building, and I did Airbnb with that unit for a while. So I had a little portfolio of smaller multi going in Central Florida. And then I moved to Arizona, and the pandemic happened in 2020. Everybody's kind of freaking out about their jobs. Where it's, how am I going to put food on the table? What's going to happen if the world is burning down around us? And I was collecting rent checks passively. And I said, oh my God, I need to figure out how to do this on a much, much larger scale. So I started teaching myself how syndication works. Yeah, the rest is history. It took a little while to get the first deal, over a year. I met my business partner during that time. And once we closed the first one, we've been on a roll ever since. So now we're up to over 500 units of multifamily with a couple development projects in the works too. Approximate portfolio value of about $70 million.
That's amazing, coming from somebody that started off flipping houses. And I think that's how we all start, right? We get this idea that we're going to buy a house and we're going to fix it up because TV makes it look so easy, right?
Yeah, exactly. It's, you buy it for 200, you put 100 in, and you make $1 million, and that's it. There's no cap gains. There's no other people's money. There's nothing like that.
Yeah, and I think once you realize the scalability of that, I actually did the math, and I figured, what my replacement income number was, and I'm sure you probably did something similar. And I looked at the number of houses that I would have to do, or doors, because I was also looking at, smaller units, 2 to 4. And I thought, time is not on my side, and it's going to take, it was something like 500 houses. And I don't even know if that's possible, if anybody even, unless you're BlackRock or somebody that has a portfolio of 500 single family homes. But that's how, I found syndication as well. And it really makes sense at the end of the day, once you understand the concept of syndication and leverage and other people's money, you can actually scale a lot quicker. Yeah. Is that what you found?
Well, yes, but that's actually not the reason entirely that I switched. My plan at the time when I first moved here was to get about 20 units of small multi myself and do it all by myself and just own them outright. And that was before I learned about syndication. But what had happened was, on my very last flip, I had a full price offer on day one on market, and it had already taken 2 months longer for the renovation than it was supposed to. And I was very excited. But when you're dealing with residential home buyers and residential sellers, often it is the largest financial decision they're ever making. There's a lot of emotion involved behind the purchase and everything like that. And none of them really are educated on real estate, including the realtors. Right. So this lady got her inspection report back, and it was brand new house. I mean, everything was touched top to bottom. And there was like one ungrounded outlet or something, and she freaked out. She thought, and inspectors are going to do that too. They're going to find any little detail that they can to put on an inspection report. But anyway, she backed out, and it took 6 more months to sell it. And I went from looking at almost 6 figures profit to ending up making about 30 grand in, I think, 11 months, start to finish, on that one house. And what had happened during that 6-month period is somebody down the street sold their house for 50K less than I thought they should have. That became a new comp. Guess what? Now my house is worth 50 grand less. And yeah, that's just the way residential real estate works. And when I found out about, the NOI pricing model for multifamily, I was just like, oh my God, this is great.
Yeah, it makes a lot of sense. And you're right. I think residential real estate, the emotional component there is really, really heavy. I was talking to a builder in my neighborhood, and he's doing single family homes. And the first home that he had built ever, he sold it before he finished it, and the owners came in, and he said that they just had this running list of all these changes that they wanted done, and he ended up taking a bath with that one. And so now all the homes that he builds, he doesn't even sell them before they're finished, because it took so much time and resources and money on his side. And as we were talking before the show started, the market is not on our side right now, to be plain.
Not really.
Yeah, so, well, that's an interesting journey. So you've had quite the experience. Like I said, I think everybody starts out, looking at HGTV and, oh, I could do that. And, we're installing our own toilets and putting in our own stoves, and painting and all this other stuff. And then we realize that, what we're actually making really isn't, worth the squeeze on the juice. So we move into something else. So you've had a lot of experience as an entrepreneur. So, and I'm sure not all of the times were, spot on and puppy dogs and ice cream. So what sort of mindset does a real estate entrepreneur need to have, especially as we're moving into this new environment that we're looking at?
Yeah, well, so one thing I can tell you with absolute certainty is that this year in particular has been one of the more stressful years of my life, um, especially kind of the back 6 months of this year. Because when everything was going great in 2021, I mean, everyone looks like a genius all the time, right? Their deals are appreciating, the rents are going up, it's all hunky dory all the time. But um, I think that this time period right now is really going to be, what sets apart really good operators. Um, Having built in enough cushion to your deals in the first place, not overpaying for them, being really good asset managers. There's a lot that is going to sort of separate the herd during this time period. Um, and yeah, as far as mindset is concerned, I think that there's a certain level of stress that you just kind of get used to, and it becomes the new normal, and then it becomes not stressful anymore. But you have to sort of get there to find out what that feels like. And that's, millions of dollars at stake, things like that. And yeah, it's normal.
Yeah, I think people freak out, initially, especially on their first deal, because they only know what they know. And then going through that experience and learning how a deal is put together and how it's executed, and then all the SEC, rules and regulations that we have to operate in, it's very, very stressful. But I think those learnings, you start to realize that it's not this big, scary beast at the end of the day, that it really is manageable. And I think we tend to build that tough skin to help push us through, those hurdles, because those hurdles are going to be there, right?
Yeah, and there's a huge mindset shift of confidence that happens with every deal. I remember, when I first thought of even doing syndication, the largest thing I had bought up to that point was 4 units, and now it's like, wait, I'm going to go from 4 to 60 or to 100. And the first deal we bought was a 60-unit deal, but even that, seemed enormous at the time. But once you understand the fundamentals of it, you're like, wow, this is possible. I just need to raise this amount of money and, do everything by the book, and it'll work. And once you do close the first deal, then it's a mindset shift of, okay, this is now no longer something that I talk about doing. This is something that I actually do. And getting your foot in the door with the first deal was huge. It took us almost 15, 16 months to close the first one, after trying to do syndication. We were in and out of contract a couple times. We walked away from some deals. And then actually closing the first one was only May of 2021. So about a year and a half ago. And, since then it took about 6 more months to get the second one after that. So we cut the time frame significantly. And then after that, the first 6 months of this year, we closed 5 or 6 deals just up until July. So
That's amazing. And you often hear about that. It's that first deal getting that first one under your belt, and then it becomes kind of like a snowball effect, right? The other ones just come, and I don't know if that's, you know, experience. I'm sure it is experience, but maybe your eyes are just open to opportunities. Maybe because you're putting yourself out there and being vulnerable, people are bringing you stuff. So what's been your experience? Because that's quite an acceleration from the first one.
Yeah. So there is an element of confidence that needs to happen. I think it's that initial mindset change. And part of that is, a first time syndicator is going to be asking themselves, can I even raise this amount of money? Like, have I ever even seen this much money before? And now I need to go around to a bunch of people and ask them to give it to me and put their faith in me and trust me to do right by them. So once you get that done the first time, now it's, hey, this is something that I can do. I know I'm capable of. And the real big piece there is now it tells brokers, hey, this is somebody who can close on deals. Because once a broker knows you can actually close, then they're going to be that much more likely to send you their deals the next time they have them.
Yeah, that's so true. That's so true. And I hear that from friends of mine that are brokers and then other seasoned syndicators. Once people understand that you can close and you can close quickly, it seems like the deals are there. And then the money comes too. I remember the first thing that I had heard from a friend of mine who does a lot of commercial real estate. He told me, he said, Michelle, don't worry about the money. He goes, the money's always there. And when you're first starting out, you're thinking, how is that even possible? Because like you mentioned, the money that we raise is almost unfathomable, to
Yeah.
see. And now I believe it because the money is there. And I'm sure you've experienced too. People are calling you, they need a write-off at the end of the year. They need cash flow. They, sold a business and they got X amount of dollars. They don't know what to do with, all kinds of stories. So.
Well, I can tell you the craziest thing for me that happened. Actually, it was last year, and we didn't get this deal. We got beat out for it by, I think it was either a billionaire or 1031 money. That both of them happened to us. I can't remember which deal it was, but we made an offer on $100 million property, and I mean, it was unfathomable just 2 years ago to say that that's something that you could actually be doing, but we regularly look at properties now in the 50, $60 million range, because we know that we could actually do it, partner with the right people, raise the money, and take it down.
Yeah, that's key, having the right team members, right? Did you experience that
Yeah,
starting out?
absolutely. Part of the reason that we invest pretty much only in the Southwest, so like I'm based in Phoenix. Our properties are in Texas, New Mexico, and Arizona. And part of the reason that we stick to this is, one, there is a geographical proximity thing. It would suck to fly like 5 or 6 hours every time you need to go to a property, but that's not the end of the world. It's because our property management company is here and we like them and we want to continue using them. We have a great relationship with them because that's so key to your asset management strategy. I mean, you can come up with the best idea in the world, but if they suck, it's not
Yeah.
going to happen,
Yeah.
So if we know, like, and trust them, then we're going to keep using them. And if they're based in the Southwest, we like it here too. We'll keep buying here.
Yeah, no, that's so critical, because starting out on your own, you mentioned earlier you were doing everything yourself with a handyman. So going from that concept to having a team surrounded by you and a team of the right people that everybody, clicks and, it's just a good fit all the way around makes the deals so much easier,
Well,
to execute.
absolutely. And I will say that, another thing about multifamily or commercial real estate versus single family is really kind of anybody can do single family on their own. And when I was doing single family or residential on my own, it really does kind of feel like you're out on an island sometimes. Like I wasn't really going to meetups and, I didn't have that much support. It was just me by myself trying to manage a bunch of contractors and a bunch of flips all at once. And, but with multifamily, I mean, it really is a team sport at the end of the day. The reason that I work so well with my business partner is because he does some of the things really, really well that I don't love doing. Like, I'm capable of underwriting, but I don't love doing it. I'm capable of calling up brokers, but I don't love doing it. I like talking to people. I like raising money. I like managing the assets. And so we complement each other in those ways.
Yeah, and I think that's good because you can't have everybody doing the same thing, right? That's not the concept of a team. And I think playing off of everybody's strengths and weaknesses, it kind of like a puzzle, right? Putting a puzzle together. I think that's what makes a very dynamic team that can just catapult the whole thing forward, and that's probably the reason why you were able to close 5 or 6 deals this year. So
Yeah. And we partner with other really good operators too, because the thing about even getting a loan in the multifamily space is there's certain requirements typically from the lenders as far as net worth and liquidity and experience are required. And so if you want to take down a $20 million deal, the general partnership team needs to have a net worth equal to $20 million. And so chances are very good you're going to have to find either a key principal sponsor or another operator to go in and co-GP with you. And so we'll do that. And we've been very, very fortunate to find really, really excellent people to work with who, believe in us, and we bring the deal and we bring the asset management and they help us get it across the finish line.
That's great. That is just fantastic. So let's talk about a time that you failed and failed fast and the lessons that you learned on this journey. Because I'm sure, everybody talks about how great it is. You can make all this money and this and that. And I did that. But very seldom do people talk about where we screwed up. So tell us about an experience that you had around that.
Well, I mean, the initial story that comes to mind is the one I already told you about, my last flip. But let me think. I guess something that I was unprepared for in this line of business. And, this is something that if you're thinking about doing like what I do, being a GP or a syndicator, the thing you got to understand about this is that if you're not closing deals all the time, you're actually not making money. We as the GPs get paid on typically an acquisition fee up front, and there's very little cash flow left to the GPs unless we're also LPs in our own deals, which usually I'll try and do that, and I'll try and roll my AC fee into an LP position. But at the same time, if I do that, then I don't have any money coming in right now. And so what's really kind of amazing about this business and terrible at the same time is I'm in a position where maybe 4 or 5 years from now, when we start going full cycle on deals, I'll probably not need to be worried about money at all. But right now, if we're not closing deals, then there's no money coming in, right? And so it's been a good first half of the year, but I haven't closed a deal since July because the real estate markets have changed so much. So if you're thinking about doing this, you got to ask yourself, am I prepared for a 5-year time commitment, and have I planned accordingly for that I can, survive on potentially not closing that much deals until all of these start going full cycle?
Yeah, and that's key, and that can translate into any business too. Are you willing to temporarily lower your living standards so that you can get the ball rolling, right? And a lot of people aren't willing to do that. They want to maintain their current lifestyle, but still have the sexy life of the entrepreneur. But sometimes that cash flow doesn't follow that, right?
Yeah, entrepreneurship is plenty unsexy. It's got its real high highs and its real low lows.
Yeah, yeah, and very, very little in the middle, right? So, I mean, the swings on it are ginormous, and I know for years, people have always said, "Oh, you're so lucky, Michelle. I wish I could do what you do, and you're this, and you're doing hair." And I'm like, "Oh, no, that's just what you see on the top. You don't see what goes on, on the bottom and the day to day, and trying to figure out how you're going to pay your employees. And oh my gosh, we got taxes due, and all the other stuff that goes along with it." So let's talk a little bit about the current market? Because you mentioned that you haven't closed anything the second half of the year. And, if you read the headlines and the clues in the news, there's a lot of stuff, going on. Interest rates are going up. Some are saying that it's going to go. I think JP Morgan came out the other day and said, they're anticipating 8%. Of course, we had the FTX meltdown the other day in crypto. So there's just all sorts of stuff. Investor sentiment is very, very low right now. So, if I was a retail investor and I wanted to invest in real estate, maybe in a multifamily syndication or commercial of some sorts, what should I be looking at? What are you seeing? Where are you going?
Yeah. So we're doing a couple of things. The things that I will say is that it's a very interesting time in real estate right now because, sellers think it's still 2021 and buyers think it's 2008. And, interest rates have basically tripled since the beginning of the year, and they're probably still going up, but the seller expectations haven't quite adjusted. And so it just makes a lot of deals harder to pencil out the same way that they would have previously. And our investors are conditioned to, certain return metrics because we pretty much won't get into a deal unless we think we can't double your money in 5 years. That's kind of our minimum. If we think we can do that, we'll get in. And if we don't, then we don't really make an offer unless it's low enough to make that happen. So it's a little harder to find deals that pencil right now. But we are Nimble Capital Group. So we're in a couple of different asset classes as well. We have development deals going on, which are pretty exciting. We have 2 development deals, 1 redevelopment deal. But again, that's kind of a different asset class. If somebody's okay with parking some money for 3 years and they might double their money in 3 years instead of 5, but you're not going to see any return during that time because there's nothing there, right? So another thing that we are actively looking into right now is short-term rentals. So I have a little experience with that, but we know some people who are doing it very, very efficiently, and we might partner up with them and raise money together and start a fund. So that's one thing. And, in the meantime, we're just going to keep managing the assets we have, and we write offers all the time, but multifamily is a little slower than it used to be right now.
Yeah, that's interesting that you said sellers and buyers haven't quite adjusted to the current market. Maybe buyers more than sellers, because I'm still seeing properties that, when I'm talking to the owners, I'm like, really? Like, how is that even going to move? Like, your expectations are crazy. I'm looking at something now that they picked up relatively cheap last year, and it's literally 2.5 times their purchase price. And it's it's amazing to think some people think that they can still command 2021 values, and it's not there, especially with the interest rates going up and the requirements to get a loan. And on the other side, sellers are, like you said, they're like, woohoo, 2008, we're going to pick up all these deals again. And so we have a little bit of a mismatch right now. So that's I'm seeing the same thing, and talking to a lot of people too. The investor sentiment is pretty much sitting on the sidelines and just waiting and watching. I think that there's a lot of volatility, not just here in the United States, but all around the world, that affects us here. Commodity prices and forex and all sorts of stuff. So I think a lot of people are just kind of sitting on the sidelines. But that being said, you said you're writing deals all the time.
Yeah, and I don't think there's a bad time to buy real estate, whether the market's up or down. I think if you have strong fundamentals in your underwriting and you build in the right amount of cushion, and I think that, if the only thing holding back a deal right now is interest rates or financing, then there's creative ways to get around that. You can sell or carry. There's options out there. And if you can find a deal and it works because of creative financing, then that's probably a great deal. And so there are definitely still deals happening, right? But I think this is a time that will separate people who looked like geniuses for a couple years versus people who really, really know what they're doing.
Yeah, and I think, as you said earlier on, I think this market is going to flush out those people. And I think that's what we need. We need a flushing out. And then the good operators and the good deals and things like that will come out at the end. Because there's been a lot of people that flooded the market that we have seen, and not all of them are good actors.
Well, I think in 2020 and 2021, with what happened to interest rates, I think a lot of people overpaid for a lot of properties. And I have a feeling that a good number of those people did 3-year bridge loans with adjustable rates, and they're going to need some sort of event to happen after year 3, which who knows, maybe that's next year, maybe that's the year after. But when that rate changes and they either got to refinance, but if the rates are still 8 or 10%, they can't refinance. That's when the deals are going to come in because people are going to be forced to sell.
Yeah, and I think that's what a lot of the seasoned investors are doing is they're waiting on the sidelines because they've been through at least 1 or 2 cycles like this, and they see the writing on the wall, and they know when those deals are going to come. Because you're right, people overpaid. Cap rates were really low, interest rates, I mean, money was super cheap. It's not super cheap anymore, and if part of their plan, like you said, was to refi out in 3 or 5 years, they're kind of on the wrong side of the stick, because that's not going to be able to be realized.
Yep.
So I think, not that I wish anybody, ill or any harm, but I don't know if anybody could have seen that this was coming, especially this quickly, if they were, buying a deal, 2, 3, 4 years ago. It's just really, I think somebody has poured jet fuel on it. So especially aggressive as the feds are raising rates too.
Yeah, it's kind of been I mean, if you look at 2020, the world was kind of literally on fire, but then counteractive measures were taken to kind of put that fire out. 2021 happened. Everybody's like, wow, it's great. COVID's over. We can, party again. And nope, 2022 comes around and the fire is back.
Right. With a vengeance, right?
Yeah, with a vengeance. Yeah.
Yeah. Well, hey, I'm going to open it up for questions and see if anybody has any questions. Some of the ones that I've received are, is it a good time to invest? Should they wait? But while we're waiting for some questions, where else can people contact you? Because I do know that you might have some active deals coming up. So if they were interested, where could they learn more about that?
Yeah. The simplest way is just send me an email. It's on the bottom of the screen right here. But on our website, nimblecapitalgroup.com, my Calendly link is right there. You can schedule a call with me. I'm pretty active on LinkedIn, Facebook, Instagram, and I just made a TikTok. So I joined the dark side and I did it. I'm having trouble posting them though. It feels weird. It feels wrong, but
it really does, right? Okay, so we do have a question here. Amber wants to know, what were your top go-tos for syndication learning? So where did you get educated?
Yeah. So I read the books first. I read a lot of books. The book that I read that kind of changed everything is called Multifamily Millions by Dave Lindahl. And at the end of the book, he has a plug for his mentorship thing, which is RE Mentor, which is kind of the biggest one. It's been around the longest. A lot of the current gurus were Dave Lindahl students. So I ended up doing the thing and I paid all the monies. Mentorship is not cheap, but I will tell you that I was the kind of person where if I paid, 30, 40 grand, there was no way in hell I was going to let it go to waste. And, I got my monies back in the first deal. So that worked out really well for me. It's also really about the network. So, I met my business partner through the mentorship group. I met a couple of our other co-GPs, sponsors, everyone through the group. It's really, really powerful to be plugged into a network of people who are all trying to do the same thing and all trying to help each other out. You can ask questions to the group at any time, get answers on anything, and it really allows you to really kind of rub elbows with people who've been there and done that and know what to do. So that's really powerful. And I can recommend the one that I did, RE Mentor. I can't speak for any of the other ones. I've heard some of them are very good. I know Joe Fairless, Rod Cleef, all these guys, Hunter Thompson, they all have great mentorship programs. So yeah, that's how I did it.
Yeah, and that's great. Thank you for sharing that. And I think just being a sponge, listening to podcasts and picking up the books and reading them and learning what it is, and reaching out to people and start developing your network and seeing if you can't help run a syndication so that you can learn the ropes, because there's a lot to learn, and maybe you're not a GP right in the beginning, but there could be things that you could add value to somebody that they could bring you on.
Yeah, and I should probably plug that also, that we do give out a lot of free educational content. We host, our meetup is tomorrow, actually. So if anyone listening is in Phoenix, you should come out to our meetup tomorrow. But yeah, so we do monthly meetups, we do webinars, we try to get podcasts. There's so much educational content out there if you're just willing to consume it.
Yeah, no, and I think education is key, right? You have to stay on top of it, because even though you think you know it all, there's regulations that change, and I'm still running into people that are structuring deals in a way that I never ever would have thought of. So I think being plugged in is definitely a good thing for sure. So, well, Michael, thank you so much for joining us and spending your evening. I do appreciate that, and I hope that you have a good meetup tomorrow. And Michael's email is at the bottom there, but check him out at nimblecapital.com. Is that correct?
Nimble Capital Group.
Nimble Capital Group. And I do believe that you have some sort of investor club or investor sign up or something if somebody was interested in your upcoming syndications.
Absolutely. All right there.
Okay. Yeah, that's super. So I encourage everybody to check them out. Well, hey, thanks so much. And let's loop back around and see how you are doing in the future. You got a great story there and a bazillion guitars.
Thanks for having me. Appreciate it.
All right. We'll see you later. Bye, everybody.